All right. Good morning, everyone. When we set this up, we said, well, we may have one or two people show up, but the idea was to record it so that other people could see it. So I'm amazed that anybody even showed up this morning. So I'm happy for you guys. All right. So we're going to talk about this very important program. Some of you probably went through my presentation the other day. This has changed just a little, not a whole lot, but we have found out a few things since then. So we're just going to cover the program, who's eligible, who's not, how you can use the fund, and most importantly, how do you calculate it and how do you apply for it and what documents you need. And as Heather mentioned, questions, just put them in the chat box and we'll talk to them after the presentation's over with. All right, so this is the actual portal that you'll be applying through. Some of you may have already set up an account through that. If you have, just put in the chat box, hey, I've already set my account up, so we know somebody's actually done it. If not, this is where you're going to be applying. Right now, all you can do is register. You cannot apply for it, but you can register. So after this event, you may want to go ahead and get in there and register so your account is set up. And then Monday at 12 o'clock is when you can actually start applying for the information for the actual program. So, so who is eligible? Well, first of all, you can't be closed. If you're closed permanently, then you're out of it. But if you're temporarily closed, that's okay. And it even includes businesses that are not even open yet. This is the biggest part about that. That can be very useful to somebody who has been in the process of getting open and not just open yet. So this is going to apply to restaurants, food truck stands, food trucks, food carts, caterers, people like that. Additionally, there's going to be things like bakeries, brew pubs, breweries, microbreweries, wineries, distilleries, things like that. There are some restrictions as to these particular programs. If you're in one of these type of industries, you must have at least 33% of your gross sales sold directly to the public. In other words, if you were a bakery and you sold 100% wholesale, you would not qualify for this program. All right, franchises are also included in the process, and this is just some information about bankruptcy that if you apply to, you can take a look at this and see whether or not it affects you. All right. On this screen here, we're just talking about ineligible entities. The things I just want to mention mostly is that if you're permanently closed, you don't qualify. If you're a nonprofit, you don't qualify. And if through the mathematics, your grant comes in less than $1,000, you will not qualify either. Whoops. All right. So PPP programs. I'm sure some of you may have received a Paycheck Protection Loan Program. The way that's going to work, and you'll see it when we do the math, that it's subtracted from the actual amount of the grant that you would receive. Now, if you do have a PPP loan in place, a application in place right now, but it's not been approved, you will not receive that. It will automatically be canceled. If you had received an EIDL, either an advance or a loan or any other local CARES grants, which are multiple, that has no effect on this grant program. So the only thing is it's not included in your gross receipts, but it doesn't subtract from your grant amount you receive. And if anybody who has received PPP or even an EIDL and things like that, they're all going to have this little box that says current economics uncertainty makes this loan request necessary to support the ongoing operations of the applicant. Just to let you know that is a certification is required. All right. So if you get this grant, which we'll talk about in a minute how you figure it out, you have between February 15th, 2020, which obviously is already gone, through March 11th, 2023 to spend this money. All right. So what you can spend it on is payroll costs, including sick leave, health, vision, dental insurance, business mortgages or loan obligation. This is principal and interest payments, business rent, utilities, business maintenance expenses. This is just basically keeping the building up, business supplies, business cost of goods, which is food, beverage, goods reserve, your typical cost of goods. It also includes business operating expenses, which are pretty much essential operations, basically anything required to keep your business up and running. Okay. And especially when it does perishable goods, it means anything going forward after anytime you buy anything during the covered period. So for the most cases, anything that has to do with your day-to-day operation, this is going to be that you can use these funds for. The only exception will be that you can't use them to expand your business. Okay, so in other words, you can't open up a new location, you can't buy a new food truck, you can't, can't buy all brand new equipment because you need all brand new equipment, etc. All right, the other exceptions, if you have compensation in excess of $100,000 for any individual, that has to be back down to $100,000. And it does not include, and this is always an issue because you have to go back and figure all this stuff out. It doesn't include federal employment taxes that you've imposed or collected. And this is the employees or employers' Social Security. If you claim the employer retention credit, you can't use the wages that you use to claim that credit. All right. So from a reporting standpoint, you have till March 11th, as we said, 2023 to use the funds. Okay. The way it's set up now, and of course, this could all change tomorrow, but by December 31st of this year, you've got to report how much money you've actually used and what it was used for by the end of the year. And you have to do that annually until you certify all the funds have been used. And that will all be done through this portal that I just showed you. All right, so let's talk about the calculation. So for most people, it's based on gross receipts, and gross receipts, as I mentioned here, does not include any PPP loan, economic disaster, EIDL loans, advances, state and local grants, or if you happen to have an SBA loan, this is also the Section 1112 payments. If you don't have an SBA loan, you don't know what that is. Anyway, you also do not include in your gross receipts your local meals tax or your sales tax. So in other words, it's normally going to be the money that's on your tax return as gross income. Okay. You also, from capital gains or losses, those would also be backed out. The minimum funding, as we mentioned before, is $1,000. If your math comes out less than $1,000, you cannot apply for this particular grant program. And one thing they've made fairly consistently put out, once you apply for this and once they pay it, if you go back and go, oh man, my math was wrong, too bad. They're not going to update any program. So once it's been issued and pay, you're done, it's gone, and there's no backing up from that. All right, so let's talk about the calculation method. This is the exciting part. Applicants that are in operation prior to January 1st, 2019. So in other words, you were in business all of 2019. This is a really, really simple formula. You look at your 2019 gross receipts. You look at the 2020 gross receipts. So, and then you need your PPP funds that you receive, both first and second draw. So the formula is basically you take your 2019 gross receipts, you subtract your 2020 gross receipts, and then you subtract all your PPP funds that you received. So you add the first and second draw PPP funds, and whatever's left over is your grant amount. So as an example here, I took this particular restaurant had 500,000 in gross receipts in 2019. In 2020, they had $250,000 in gross receipts, but they also received 2 PPP loans adding up to $75,000. So if you take the 500, subtract the 250, which is the difference between, and then I have to back out the PPP loan, you end up with $175,000 grant amount. So that's the simplistic formula of how it works. Pretty cool. All right. Calculation number 2 is if you're in operation only partially in 2019. It basically works the same way. The only difference is if you're only open for 6 months, you're going to take your total gross receipts for 2019, divide it by the number of months open, like 6, and then you multiply it by 12, and that gives you your 2019 gross receipts. Okay. Then you obtain your 2020 gross receipts, just like you would on the other method. And you also look at your PPP funds. And then you basically do the exact same formula. You take 2019 gross receipts, subtract the 2020 gross receipts minus PPP, and gives you a grant amount. So again, here's another example. My gross receipts for 2019, based on those averages, is 300,000. My gross receipts of 2020, which is my actual gross receipts for 2020, was 225. I had $40,000 in PPP loans, subtract all that out, and I end up with a $35,000 grant amount. All right, now we get to the cool people that have just started or haven't even opened yet that you can qualify for this program. So the grant amount, this would be for applicants that began operation after January 1st and March 10th, 2021, and applicants are not even open yet. So in other words, if any opened yet, you can still qualify for this. But you had incurred expenses during that period. So now we go back to that eligible expenses. If you incurred any of those eligible expenses, which is we talked about the payroll, the rent, utilities, et cetera, you were able to take those, you had those expenses, then you're going to be able to use that in your formula. So you determine the amount spent on eligible expenses between February 15th and March 11th, which means prior to March 11th, which means March 10th. So if you had any expenses during that period, you add them all up. So now you determine your gross receipts during this period. So if you were open, you'd also take your gross receipts. All right. So then you determine any PPP loans obtained. If you did, most likely you probably didn't have any, but if you did, you would take that out. So basically you would look at the amount of eligible expenses. If you add all those expenses up and you subtract your gross receipts, and if you happen to get a PPP loan, then you would get your grant amount. Let me just run through a couple of examples. You opened in January 1st, you had eligible expenses of $150,000. You did open, so you did have some income. You had $100,000 in income, and you had a $10,000 PPP loan. So you subtract all that out, and you end up with a $40,000 grant amount. Okay, let's take another example of opening December 1st. Same thing. You had eligible expenses of $100,000. Amount of your gross receipts was 25 because you were just opening for 1 month. You subtract all that out, it gives you a $75,000 grant amount. And let's just say you haven't even opened yet. So you go back and add up all your eligible expenses. It was $50,000. Gross receipts were 0 because you haven't opened yet. Of course, you didn't have a PPP loan. So you can actually get a $50,000 grant amount. So that's kind of cool. Again, this is something, if you know somebody who's opened up a restaurant or didn't open until late 2020, also pass that along to them because this is a really important part of the process. All right, if you happen to be using Square or Toast through your as your primary processing or as a point of sale or something like that, you can actually apply through them. I don't know enough about it because there's very little information that's been put across from it. But if you're using them and you want to apply through them, you don't have to, but if you want to apply through them, you do not have to register at the SBA site. If you're using a point of sale system like Clover, and there's going to be some other ones that may come out, you still have to apply through the SBA portal, but Clover is going to be able to generate some special reports for you to provide to the SBA. And all of this helps speed up the approval process. All right, so let's talk about the documentation that is required. So number 1 is the SBA application form 3172. If you're filling out online, it's an actual online application. Heather will be sending this actual application to you as part of the packet after this presentation. So you can kind of use that as a draft prep form for you to kind of understand the questions you're going to ask, because the idea is to fill this form out before you actually go online and start filling it out. So you know you've got everything you need. And then it's just a matter of going block 1, block 2, block 3, and you already know the answers. On the form, on the application, you'll also be required to fill out a 4506, which is the form the IRS requires in order for the IRS to share the returns with the SBA to validate the fact that what you said your gross receipts are, or is what the actual gross receipts reported to the IRS are. All right. In addition, if there's other things you want to use to demonstrate gross receipts, you would want to provide your tax forms for 19 and 20, and you could use your taxes such as IRS form 1120 if you're a C corporation, 1120S if you're an S corporation, Schedule C or F if you're a sole proprietor. If you're set up as a partnership, the 1065. So all of these can be used. If you have ABC reports, bank statements can certainly be a valid thing to use. State sales tax reports are also, so what you're trying to do is provide them with the documents to actually prove what you did is what you actually did. Okay, because there's a lot of invalid or illegal applications that went on doing some of these other programs. So they're doing a lot much better job to try to make sure that they're not paying people money that they shouldn't be paying them. So the more that you can provide to them, now that doesn't mean you want to give them a 400-page document, but the more information you can provide to them, the better. I think state sales tax reports are probably a really good program to use, even just as a supporting documents. You can use externally or internally prepared financial statements. Obviously, you would want to back those up with some sort of other things such as bank statements, state sales tax reports, or even tax returns. Point of sale reports, if you're running a point of sale system, that you can run those off. They mentioned 1099Ks, but of course, that's only going to be your credit card sales, so that's not going to be super accurate. So if you're also, we had mentioned about this 33%. So if you do have that 33% issue that you have to have on-site sales to the public, then you need to show something that shows that. And it could be something like a sales tax report. Again, a sales tax report should show exempt sales, which means it's going to be your wholesale items. So you want to see that you are actually collecting sales tax on at least 33%. All right, so if you're opened in January 1st of 2020, and between that and March 10th, and applicants have not yet opened yet, you must supply documentation of gross receipts. Okay, if not open, this is not required, obviously, but if you have gross receipts, you use the same thing we talked about before: sales tax reports, POS reports, et cetera, et cetera. All right, must supply documentation. Since yours is based on eligible expenses, you got to prove that you actually had eligible expenses. So the more information that you can provide to them, the better. One thing they pointed out is if you provided a profit and loss statement and a balance sheet with a letter from the CPA acknowledging these expenses, developing what we call a CPA comfort letter, they will accept that pretty readily. The problem you have is most CPAs will not do this because of insurance reasons. So you certainly, if you have a CPA who does your books and they provide, pretty full coverage of your bookkeeping, they may be willing to do it. But if you use your accountant just for tax returns, they're most likely not going to provide that letter to you. So you're going to have to look at other backup information, such as providing 941, which is your payroll reports, payroll journals, all your lender loan statements so that you can show the payments that you made, copies of all your expenses that you're trying to claim. So it could be numerous, but This is the only way you're going to be reimbursed for showing it. All right, for everybody, you have two options for your bank. One is they're going to want to see the previous 3 months of bank statements. For one is you have to be open for, you have to have a bank open for 3 months if you're a sole proprietor. But if you're a business, an LLC or corporation, as long as it's in the name of the business or corporation, you're okay. But they'll want to see the previous 3 months because they need to validate that the bank the bank is actually valid. Or if you have an online account, then you can provide the electronic access by your username and password, just like you do if you're using QuickBooks Online or some of the other things where it actually validates your business. That is by far the best way that they can validate that this business belongs to you. I mean, this bank account belongs to your business. All right, so how do you apply? We always talked about the applying at restaurants.sba.gov. You create an account, you complete the application, then you upload all your documents. And then what happens is they'll email you a packet, which is a DocuSign package, which you'll go through the process, look through, sign off on it. And once you sign off on it, the application is going to they're going to try to review them within 14 days. And if approved, funds are going to be deposited directly into your account, usually within 7 days. So the whole process is supposed to take 21 days. Okay. If you don't have access to the internet, you can call an 800 number. I highly discourage that for the simple reason you can imagine how slow that's going to be. So I would highly discourage against that. For some reason you don't have internet access, you contact us at the SBDC and we'll work with you to get you taken care of. As I mentioned about our POS restaurant partners, those are like Toast and Square have those particular systems. If you have multiple locations, if they're saying the EIN, there's still only one application. If you have different EINs, there's a different application for each EIN. All owners that own 20% or more, you must list your personal information. So you need to make sure if you have 20% or more owners, you get all their information before you get ready to do their application so you have it in front of you. All right, so this is again the portal. I just wanted to show you. I'm not going to go through the process, but you can easily see, use a username and password. If you have another SBA account, like for an EIDL or for anything else, it doesn't matter. This is a totally different program. So you can use it's going to be setting up a whole new payroll, a whole new username and password. So don't worry about duplicating your username or anything like that. All right, so for the first 21 days, this is reserved solely for women, veterans, or socially economically disadvantaged individuals. Okay, everybody can apply for it during this time frame, but the preference period is for women, veterans, or socially economically disadvantaged individuals. So if only 5 people that are women, veteran, or socially or economic disadvantaged individuals apply, and there's 10 applications in there, then they'll process the 5 first and then move on to the others right after that. So if just because you're not a woman, veteran, or social economic disadvantage, you still want to apply because they're going to base it on where you're at in the queue. So the higher up in the queue you are, the better chance of you being getting through the system quicker than anybody else. And I'll leave this for y'all. You can easily read through it and determine whether or not you're a small business concern, social disadvantage, economic disadvantage. The most important part about this is if you're a women or veteran or social economic disadvantage, it has to be 51% owned. And this could be owned by one person or more than one individual. So in other words, if you have 2 women and each person owns 25.5%, you're okay. Okay. If so, it doesn't matter how many, as long as they all add up to be at least 51%. So just a couple of minor things here. If you do, if you close the business down, you do have to return the funds. Grant funds are not going to be included in the federal gross income, but you will be able to take the expenses off on your tax return. And a DUNS numbers in registration SAM is not required. At one time it was, so you don't have to worry about that anymore. And employee retention credits are not deducted from grant funds. So that's just letting you know that that's not taking off that gross receipts number that we had talked about. And that is about it. So to sign up for a one-on-one meeting, and we're here to help you. If you're interested in us working with you, we're more than happy to help. Either we can do it virtually, you can come out to our office. We may even be able to come out to your restaurant or your facility if need be. Our desire is to make sure that as many people take advantage of this program as possible. The amount of money they have in this program is very, very small, even though they keep saying, oh, it'll last till September. I doubt seriously it's going to last to the end of June, but unless they put more money into it. The other thing is make sure you pass this information along to anybody else you know that's in this industry. But anyway, if you want more information, you can click on this link, roanoksmallbusiness.org/RRF, and it's a restaurant, whatever it is. We can help you take care of your application process. And that's it. Heather, if you want to stop the recording, then we can go ahead and see what kind of questions and answers we got, or we can keep them going. It's up to you.
All right, I will stop the recording and then we can have question and answer.